The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Pete. Thanks for turning up, Pete.
Again?
Yeah, exactly. Well, do you know what? Just had a conversation on today, 20 minutes before. I normally text in the morning, and I say, guys, 20 minutes ago, till we get on, 15 minutes. Then Steve comes back. We had the discussion in the week, and it seemed like Paddy couldn't do it for some reason. And then I'm not going to say right here, we're going to call Steve back later, and he can explain why he's not on the Weekend Podcast. It's one of the most pathetic excuses I think I've ever heard in my life. Even one of the worst excuses to go to London, I think. Yeah. It's something I hate. But then Steve texts back, after I said, 21 minutes to lift off, boys. I'm not on it today, about to leave for London. I said, what? You didn't mention this earlier? And then he texts back and said, I thought I did, but I just checked, and I must have told myself. And then I said, well, just me and you then, Pete. Paddy can't do it, because he did mention earlier in the week he couldn't do Saturday. And then Steve says, oh, that's it. Paddy said he couldn't do Saturday. I thought someone said it.
So I just assumed that was me in my head.
Yeah. So I think you give an appropriate reply saying, I'm the new German Chancellor. No, hold on. No, someone else said that, not me. Yeah, exactly. Because someone else said it, Steve. It's not from your brain. Maybe you think it's because of a collective WhatsApp. He's saying it as well. But I mean, the reason he's going to London for is, I thought, are you... Just checking. Steve is heterosexual, yeah? Because what he's doing today doesn't strike me like he is. Some of the things he does.
That was. I wasn't expecting that response. Yeah, of all the things he could going to London for. I'm not sure. Yeah, why is he going at 8 o'clock in the morning as well? Anyway, whatever.
Anyway, do you know what? This week has been mad with the results. Because it's results season, It's been interim results from lots of companies. And my eyes have been burning just recording podcasts. And I don't mind talking to people. It's just the stuff afterwards, creating the blog and uploading it and all that admin nonsense you have to do and sharing it. Drive me insane. I felt like I've been aching this week. Have you ever had that aching from sitting down in the same position? And the Apple Watch said, it's time to stand up. And I thought, okay. And so I've been sitting at the desk all day, I know you should it's really bad for you sitting down, isn't it, for long periods? Yeah. So not good. I was a stat about that, saying you need to stand up for at least, I don't know, if you sit down for like an hour, you need to do 5 minutes of exercise.
But have you tried those sit-stand desk things? I can't stand up working.
No, I can't. I'm very uncomfortable. My elbows and arms in the wrong position. Yeah, I can't seem to type. It's like my tendons are not connected properly for that. I think they just don't work. But I tell you what, Peter. Oof, eh? Ooh,
yeah.
Two days, eh?
Yeah.
Ooh.
Lots of anticipation.
Yeah, it's getting. I'm getting quite a little bit nervous when I think of Polarean.
Yeah.
It's a massive sort of binary outcome, isn't it? Really, the FDA saying yes or no. That's it.
Yeah, my fear is how the market responds.
Yeah,
because as we saw this week on a couple of or particularly Escape Hunt. The market doesn't always react like you think it would react. But
I'll get into that. I'm very annoyed by that actually. But I forgot about your poll, but I did just put it on the Discord channel on Share Pickers Investment Club for the Weekend Podcast. If FDA approval is granted, are you looking to add to your holding? And I thought, point up for yes, press OK for happy with your holding, thumbs down if you're going to sell some, or press X for sell all. Now, there's one X selected.
I think you can do polls in Discord, can't you?
Okay, I don't know. Well,
but anyway, I like your workaround. It's nice.
Oh, hang on. I couldn't see the poll there. But, so there's only one X, but that was me adding that selection so you could add it. But so far, say 4 people have gone, because I only just posted it there. 4 people have gone, they're going to increase their holding. 11 said they're happy with their holding. 2 said they may reduce a little bit, because I think some are like scarily,
overexposed.
I'm always worried about using that term because it's subjective completely. And I say because if you think about it, there are many, many people in this country that have their whole livelihoods invested into one small business. They're self-employed, and that's what they do.
Yeah.
So everything, they get all their earnings from it, their money, they've invested loads of money over it over the years, their family rely on it. So that to me is, is it overexposure? I don't know. But
the big difference there is you're more in control. So...
Yeah. But if you look at Polarean, it's got 25 million in cash. It's a listed company with pioneering technology. You know, it's gone through clinical trials, which are the sort of riskiest part. And it's got an FDA approval. It's got a massive market, a real big market. So what do you say when someone says I'm holding 50%? Maybe it is exposure. I don't know.
I mean, looking at the portfolio this week, and certainly the tail end of the week, it really took a bit of a dip. And you sort of think, yeah, if FDA approval comes in, I'm just going to go all in. But just sell everything else, put it all in Polarean. But I don't know.
I was talking with Paul Hill. We do this bi-weekly, fortnightly sort of chat with lots of stocks, and he was saying, you know, he's been doing very well, but two of his stocks took a hammering. He just got into Boohoo recently, and he put some big chunks in, and he also holds Roslyn Data. Now, Boohoo's results, they went down 15%. And it'd grinded a little bit lower since he'd bought them as well. And then he took that 15% hit. So he's down about 20% on that, at least within a week, you know, pretty much, or within a couple of weeks. And Roslyn Data sold off like 20% on results, you know, and the results weren't that bad. It's like Trufin, we're getting to that later. They weren't that bad, but in this day, in this market, it's almost like if you've got no news, don't put any news out. Don't try and don't try and pump the price with some fluffy news, because the market is not very forgiving. And if you put out news that's expected, you almost take a hit. If you take news exceed, you know, expected. Again, it's almost like you're putting your head above it's like World War I trenches, you know? Put your head above the trench there, you get shot. So if you just sit quiet, do nothing, the parapet there, just do nothing, sit quiet, because that's the best thing to do in this market. Because it's hard, very hard. But and when you get nervous looking about Polarean, because it is a binary outcome, pretty much.
Yeah, I know. And it's been so long in the build-up, isn't it? I mean...
2 days left. But I mean, the thing is, it's what I posted in the Discord group. I said, just a reminder, should you need one, FDA applications are based on safety and efficacy. And we've heard that efficacy thing banded around with the vaccines a lot, haven't we? You know, basically that means the ability to produce a desired or intended result. Now, if you look at safety, right, first of all, they said their positive results to these clinical trials validate our belief Polarean's tech allows clinicians to visualise aspects of lung function that's never been seen before with MRI, both safely and quantitatively. And if you look at the chart on their site, and they go, because the HP Xeno MRI technique does not use ionising radiation like CT scans or nuclear scintigraphy scans, the technique can be used repeatedly without harm to the patient. Currently, FDA have approved contrast agents in CT MRI scans that are radioactive. So, you know, and it's also, Richard did say, so how it enters and leaves the body as well. There are many contrasting agents which you have to drink or swallow. Monty's on that. You have to drink stuff, like baronium or whatever it's called. And, it's quite questionable how long it takes to leave your system, you know. And some are even injected. And again, it's quite, people don't know when all of it leaves your system. With the xenon gas, first of all, it's not radioactive. And you breathe it in, breathe it out. So you know how it enters and how it leaves, you know, so it's not a problem. And even if a little bit does go in the bloodstream, it doesn't matter, it's not radioactive. So we know it's safe, you know, that's one thing. It's ticked off, we know it's safe. And efficacy, does their trials design, does it produce a desired result? So you've got to say, did their trials designed in collaboration with the FDA produce a desired result? So both trials met their primary endpoints, showing predefined equivalence of hyperpolarized xenon gas to approved comparator. So they compared it to 133 xenon scintigraphy, which is radioactive. And Polarean technology could offer clinicians a powerful visual tool. So it did that. It met both endpoints. So it's safe and it's effective, or efficacy. So
in terms, so one thing, just in terms of timing, like talking about the build-up, it was interesting listening to the podcast you did with Vadim about Polarean. And obviously everyone, like you well, we've just said 2 days to go, but of course, yes, they might get the approval, but then there's the getting the RNS together, getting it sorted out, published, blah blah. So it could well be more like mid to the end of the week when we actually hear something. Now it'll be interesting. Will we see a dip on like Tuesday or Wednesday when people, well, it's obviously not happened because we haven't heard anything, and we'll see a dip. And I think it's going to be a very interesting week in terms of.
It's genuinely exciting, I think. Someone said to me, nerves are basically excitement. It depends how you frame them, how you deal with them. You know, you can either look at it like I remember when I think a stand-up comedian said you can either get nervous before you go on a stage, or you can treat it like excitement. Because it's the same kind of chemical reaction in your body, essentially, and it is exciting. You know, if you didn't have this in your life, then what would you do? It's like, pretty much shares it is in my life. I love it. Yeah. So I love this thing. But, if you think about it, on a practical terms, right? Whenever I speak to Richard from Polarean, it's about 2 or 3 in the afternoon over here, you know? And when an RNS comes out on 7 a.m. So they'll release that 7 a.m. because it's based, but that's their time limit. So he'll talk to me at 3 in the afternoon. If you look at the FDA, right? So let's say Chuck goes into work of a morning. He knows that he has to send some approvals out. That happens every day. Every day they send approvals out. And, he stops at the donut shop, whatever. What do they have in America? Dunkin' Donuts. Hey, Duncan, can you give me my usual donuts, please? And so he goes to the FDA.
It's Duncan. Anyway, carry on.
Yeah, Duncan. No, I did a spoof call once, asking to speak to Duncan. Excuse me, Duncan there, please. Duncan who? The guy who owns the shop. And they said, Duncan. No, there's no Duncan here. There's no Duncan there. Why you call it Dunkin' Donuts? No, it's Duncan. I know it's Duncan. Why are you calling it Duncan? No, Duncan, I know. Anyway, so I did.
I remember those calls. Yeah.
Right. So Jeff goes in and he has to make the call to Chuck first. Chuck, I'm about to press the button. Yeah. But then. It settles down, because surely they'll check something, or would they do checks the day before? And check things that are okay, and they're sending out. So I shouldn't think as soon as he gets in, fires up his computer, send out the email straight away. He's not going to do that, is he? Have a daily work routine. You do some checks beforehand, and then by the time you get round to it, which anyway in the US it'll be like in the afternoon here. Yeah. And then
probably the first thing he does is top up his shares.
Yeah, top of his shares. Eat his donuts, share them on the office, have a coffee.
And then release.
Talk to Sherelle. Hey, Sherelle, how you doing? Right? Yeah. What's happening tonight? You fancy popping out? To Duncan? So there's all that chat and banter.
No, thanks, Chuck.
I told you I'm married. Didn't stop you last time. So there's all the banter in the office, all that stuff.
Yeah, brilliant.
Send around a couple of spoof emails, joke emails. Hey, check this out! All that. So you get all that stuff off. Maybe they have a meeting or something in the morning. You never know. I don't know if they can send it straight away. I'm just thinking there could be a little lag in the time. So and then
can I throw in a curveball? What if Chuck's ill?
Oh yeah, no. Well, Jeff is the FDA. Chuck is the back of your truck, Chuck. He's a Midwestern guy. He's a Midwestern guy who has no interest in medtech, but does very well from medtech shares.
Sorry, that's Chuck. Yes, of course. Jeff's the guy.
Before he says, no, markets. That's it. Let the markets open in America. All right, call Chuck. Hey, Chuck, markets open. So then, I just think it takes time. Just admin. They send it out, even if you send out at 8 a.m. their time, which in fact office hours on 8 a.m. Office hours at 9 a.m. isn't it? So 9 a.m. over here is like 2 or 3 p.m. over here. Some people say there may be a pre-written RNS or 2 versions of one. Probably not though, because if they don't get it, they're going to have to look at it and see why and write an RNS based on that. So I don't think.
Exactly. Either way, it's going to take a day or 2 to actually get the news out, isn't it?
Yeah, and also. Yeah, so I think they have to...
Which in itself is interesting, isn't it? Because loose lips, people will know.
Yeah, so practically, I think it'll probably be 7 a.m. next day. I don't know, maybe... but surely...
Who knows?
But that's the thing, is so many moving parts. If there is delay like that, just admin delay or time zone delay, we'll put it in, send out an RNS and said, by the way, this delay is not because there's a delay. It's a delay because of just, Jeff.
Yeah, right.
Jeff did daily office routine. It takes a while. That's it.
Jeff's ill. Jeff's off today.
You imagine that on all days. Yeah. But Jeff is off ill, but his stockbroker account is very active today.
Yeah, it's very busy. Jeff and Chuck must both be really minted, mustn't they?
Yeah. So I wouldn't worry about the slippage in a couple of days. No.
Yeah.
So,
no. But the market, as we see time and time again, the market, people.
Have no patience. They've waited a year, and then one day, right, I'm selling.
Exactly. So, but and then that could be an incredible opportunity because the very next day you might hear some positive news. So who knows?
Yes.
There we go.
The thing is, like I said, Richard did say if there is a delay for significant reasons, then they have to inform the market. As yet, they haven't, and so if it comes out an RSS delay.
Yeah. So you think?
I said first of all, ladies and gentlemen, if you are an owner of Polarean and there's a delay, read the RNS first before just hitting the sell button. Yeah, because that's a problem. People don't read RNSs, and I this is probably why I do videos and stuff. It forces me to read and actually copy and paste some of the RNS and put it in big capital letters. I think that's significant. Because if you just look at the top line of something, and oh no, it may not be what you initially think. So yeah. But well, if you think about it, safety and efficacy, it looks like a done deal to me. It just
Well, yeah, and the thing is with the delay, like you say, they probably would have been told by now, so you would know if there's a delay by now, wouldn't you? Because surely FDA don't. Yeah. They tell them? I don't know. I don't know how it works.
But currently, they are injecting radioactive contrasting agents into people to do MRI and CT scans. That's what they're injecting it. We are talking about a non-radioactive gas. You breathe in for 10 seconds, leaves your mouth, and that's it. And it's not radioactive. So, on a safety point of view, xenon gas is used widely. It's not a problem.
If the FDA approval doesn't come through, you're going to be straight onto the phone to the FDA.
Yeah.
I've got a feeling you're going to be livid.
Yeah. Imagine if Jeff did say that. Say, I'm gonna knock them back. Okay, so short the stock, and then we're going to produce an approval a week later. And then buy the stock.
Yeah. Well, exactly. Yeah. Chuck's like, yep, okay.
Short the stock. How do I short? I don't know. I look into it. I'll give you a week. Yes. No. But on the face of it, I'm quite confident. If you look at it, does it do what it's supposed to do? Yes, not better than. Like I said, it can. The polarization of xenon gas can multiply the image of the lungs by 100,000 times better compared to that in the MRI. So, of course, it's better than anything out there. Is it safe? Yes. So on those two levels alone, it's gone through clinical trials, which were designed in collaboration with the FDA, the application that formed the basis of the application. So it's all done through FDA. They've had weekly talks, pretty much. And so, what's the problem? And like I said, as for commercialization now, if it goes commercial, it's a huge market, huge market. And and even 1% of the US market, if you think of it, 1% of 150 billion is a lot. A lot.
Yes. I wish we had Steve to work that out.
What is it? It's
1% of it was 1.5 billion, isn't it?
Yeah. Yes, it is 1.5 billion. So that's annual. That's annual revenue. That's way above the forecasts. So yeah. By the way, do you know? I just learned. When people say the market's this big or this big, I've just learned the difference between TAM, SAM, and SOM. Do you know what they are?
No.
Have you ever heard of those? I heard of TAM, but I was talking to a tech guy, and in their presentation they've got these Venn diagrams. So TAM is the big circle, and that's total addressable or total available market. Is the total market demand for a product or service. That's the maximum you could ever achieve. So that's the big. So in terms of billions, and then you got within that.
And SAM is serviceable available.
Oh,
market.
You googled it now, isn't it? Wow, that's amazing! I just came back to you like that.
I just remembered it's the portion of TAM targeted and served by a company's products or services, isn't it? I think, isn't it?
Yeah. Wow. Do you know? It's amazing that I came back to you there.
Yeah, no, it just came back. Yeah, no, I thought it rung a bell.
Does SOM come back to you at all? That's a smaller circle within SAM. Yeah. So SAM is within TAM. TAM is the big circle. SAM is a bit smaller. And SOM is, that's
the serviceable obtainable market, isn't it?
Yes. So that's
or share of market, and it's basically the percentage of SAM which is realistically reached, isn't it?
Yeah.
I thought. Yeah.
So let's say, I mean, to explain this, right? Let's say you start with this is on the website here. Let's say you're starting with a fast food chain called Chuck's. Because Chuck now, he's got a bit of cash. Yes, right, he's got a bit of cash. He's going to invest in the fast food. People love fast food, man. Yeah. Love it. Okay. Can't get enough. So your TAM would be the worldwide fast food restaurant market. How big is the market? What's the overall appetite for fast food? Potentially, if you were to present in every country with no competition, that would generate TAM revenues. So essentially, no competition in every market. That's TAM. So that's not realistic, is it? That's not going to happen, really, because most countries you can't get to, and there will be competition all. So they say, let's be more realistic. You are starting a restaurant chain in 2 cities. So I'm going to start in 2 cities, in some Midwestern cities, where demand for fast food can be estimated based on the population, their food habits, and the revenues generated by fast food restaurants in other cities having similar demographics. So this is your serviceable, available market. The demand for your type of product within your reach. In other words, if you were the only fast food in town, you would generate revenues SAM. So that's it still. That's in a smaller area, more targeted area where you're starting, but with very little competition. That's not going to happen because you're not the only fast food chain. So realistically, you only capture a fraction of SAM. Most likely you will attract fast food aficionados living or working close to your restaurant, and a fraction of the people located further away that are willing to give you a chain. So this is your SOM. So actually, that's the realistic starting point of this is a serviceable, obtainable market.
Yeah.
So that makes a lot of sense, doesn't it? Because you often see this in presentations. I often see this in presentations that go, the market is worth 700 billion. I thought, but you can't attract all that market. First of all, you're only launching in one area, and so this is so. What I like about Polarean is they say the pulmonary medicine field in America, so there's very, and they are targeting, first of all, the top 100 American institutions, and it'll branch out across America because they are the key opinion leaders, these, 100 big institutions. So that's essentially, they say in America, they spend 150 billion on pulmonary diagnostics alone, and that burden there. So that's quite accurate. And but yet, if you go worldwide, of course, you could times that by what? Probably 5-6 times. So that's the TAM, I suppose. The TAM would be sort of close to what?
Well, I mean, globally, it's even bigger than that, isn't it?
Yeah.
But anyway,
what's a trillion? What's 100 billion maybe?
What?
Is it 10 times? If it's 150 billion in America's population is 300 million. Worldwide population is 7
billion, so 25 times that or whatever.
Okay, so roughly say 20 times 150 billion.
Yeah.
I don't know what that is. I'll do it on my calculator.
That's a lot of noughts.
Yeah.
Just for that.
So 3,000 billion. What's that? Is that 3? No, it's not 3 trillion.
That's 3 trillion, isn't it?
Wow. So that's TAM, yeah.
But yeah. Okay.
So that's very good that know what TAM is, because you often see these companies coming out, right? Especially IPOing and the new, and they often use the TAM figure, and it's a very impressive big market. In actual fact, you can't, because you see gaming companies. Someone says the gaming industry is worth, 150 billion. You're not going to attract every gamer in the world for your, for anything. So it's
no, a trillion is a million. Is a million. Yeah, so it's 1,000. It's 1,000 billion, isn't it? Yeah, that's right.
Yes, that's 3 trillion. Yeah.
Yeah. Right.
Yeah. So TAM, SAM, and SOM. So it's worth knowing that what actually is a serviceable, obtainable market is what you're looking at, not the TAM, total addressable available market, or serviceable available market. It's obtainable. That's what we want. What's obtainable here? So that's quite handy. That little, I quite like that. Anyway. Poll. Oh, by the way, I did a poll on Twitter.
Okay.
Let me just last time, I did a complex poll about the quarters. I did.
I saw this one. Yes.
So I said better than, not as good as but not as better than, good but good. Q1 was good. Q2 was good, bad. Q3 was bad. Will Q4 be good, bad, go good? I admit now that was quite complex in its wording.
Do you think?
Yeah. So after you broke it down on the weekend podcast, I thought maybe that was a little complex in the wording. So I've just gone with emojis now. So Q1 is happy, really happy, smiley face. Q2 was like, okay, smile, but not ecstatic. Q3 was just grumpy, really grumpy. And I put question mark Q4, and I give you those options. What do you think it'll be? Happy? It's just very happy or smiley. The 3 options: very happy, or grumpy. And the winner is grumpy.
No, it's equal, isn't it?
38.2% for grumpy, 37.5% for very happy, 24% for just happy. But I think this has been tainted by the start of Q4. Because Q4 started bloody awful, didn't it?
Well, the first day, yeah. Yeah.
That's all we had. That's all we had, isn't it? It's one day,
Yeah, one day.
But apparently that's the case. Q4, when Q4 starts, it doesn't start very well, but it ends very well. It starts. I don't want the analogy is there. It comes in like with a whimper, ends up with a woomph. I don't know,
like a firestorm.
Yeah.
So I don't think we can base it too much on one day, but yeah, it wasn't a great Friday.
October generally is not a good month though. November.
What, for you personally?
No, for I have some breakdowns. No to a breakdown October. No, but the big crash. The markets do echo, that from the past, previous fallouts, and of course Black Wednesday, whatever it's called, the Big Bang, and all that. All the big sort of sell-offs have happened. It's a very volatile October, but then it sort of rallies towards the end, and November, December are generally quite good. Months. I think because what's it called? Good stock market months. Good stock market, and we normally follow good months in the market of the UK. Best and worst months to invest in the FTSE. Oh well, no, FTSE really. May is bad. June is bad. September's bad. October's not too bad actually.
There you go.
It's return.
Bangers that theory.
It's return. But apparently it starts off bad and rallies towards the end. But so generally, the returns, all these returns are from 1984 to 2014. January return is 0.68, February 0.87, March 0.89, April 1.77. So that's why they said go away. Because if you have a rally there, it then goes minus 0.23 in May, minus 0.84 in June. And then it goes back to positive 0.99 in July, positive August 0.5, September down almost 1% again, minus 0.93, then October's up 0.8, November up 0.65, December up 2.48. That's the FTSE. So in 1 month, it does 2.5% upwards. That's the best month. So April and December are the best months historically for FTSE. Of course, liquidity flows down, but
April is because of the ISA season, isn't it? Really, I don't think some new money flooding into the market helps.
Yeah, so it may not be that bad, but do you know what? That annoys me. I'm gonna do a video on this. I was just talking to Richard from CEO of Escape and was dumbfounded by how the market reacted to their news because in my mind, you could not on 6 weeks of trading done any better than that.
No, it's pretty good, isn't it?
I mean, it's phenomenal. I think what happens is, if you look at the I want a term for people who read. So I'm a bit like that with emails and like that. I'll read the first line. If it doesn't interest me, I'll move on. And people, I'll have a meeting or something or interview, and then I'll start. Did you not read the rest of it? No. No, we got a load of questions there. Oh, okay. Sorry. Yeah. No, I never do that. Unless it captures me in the first line. You've got to be quite punchy in the first line of your email. But I think people saw that box. There was a box on the email. Right? This is interim figures. Now remember, the only figures they had were the 17th of May. The economy opened back open with restrictions. So they were still you couldn't have more than 6 people in an escape room, and you had to wear masks or something stupid. Yeah. So it was still that. That's all they had is 6 weeks. But the first thing you saw, apart from the introductory line of global leader in growing escape rooms, is pleased to announce results that the box. Then half year, June 2021, revenue, 1.178 million. And they compared it with a half year of last year, 2020, which has also had restrictions, but that was 11 weeks of trading. That was £1,300, right? So people thought, hang on, it's gone down. It's not that much, really. That's what I think people thought there. I thought, but hang on a sec. It's 6 weeks. So if you break that down, they almost did the same amount of revenue in 6 weeks as they did in 11 weeks in 2020. And in fact, if you break it down to weeks, they did 196 grand per week this time compared to 156 grand per week in 2020. So it's a lot better than in 2020. But also, that's 6 weeks. That's from they were in the busiest 6 weeks. That's just from get-go, from opening back up after months of being closed. They did close to 200 grand a week. You multiply that by 50 weeks of the year, you get 9.8 million. That's based on 17 sites. That's not including franchises. It's not including remote play corporates doing that or print and play download things. Just 17 sites in 6 weeks. That is, extrapolate that out, and that's 9.8 million a year. They will have 20 sites. They're close to 19 sites now at the end of this year. 20 was the target for July next year, but they're going to have them way before that. So they will generate, on sites alone, 10 million in revenue. And
the question is profit, isn't it? So,
yes, but hang on. Oh, yes, good question there. So first of all, that revenue they will generate, just on sites alone, and there's growing, there's franchisees now reopening and growing, and the corporate side is doing well. That's a 100% increase on 2019 revenue. And also, like I said, they weren't the busiest 6 weeks. So since the period ended, that's after the 30th of June, like-for-like sales on sites they had opened in 2019, so they can compare like-for-like, have increased by 31%. That is excellent growth. I look for generated growth around about 20%, They've done 31% on those existing sites' growth, and that meant the company was profitable, EBITDA level, generating cash group-wise for July and August. So, after the period ended, 30th June, after 6 weeks, then it started becoming profitable in July and August, and that's all they have data for. So that's phenomenal. So they've gone from being shut for no time, generating record amounts of revenue, huge demand, coming profitable. Not only that, the cash balance went up by 1 million because of an R&D credit, because they've spent a lot of money in the software with VR and all that stuff, and they've got an R&D credit for the government for £1 million. So they've got up to 3.5 million in cash. They've got a pipeline of other sites, including Central London. How could they have done better on 6 weeks of trading in that? And the market went, I don't like that. I thought, what are you talking about? If you tried to put out a better result on 6 weeks, you couldn't. So I said, of course Richard was done. I'm surprised he was just a bit miffed by it. I've been really pissed off. We couldn't have done better than that. Oh, and by the way, we've won the lottery. Yeah, 200 million. That's the only way you could have done better, I think. It's like, because you can't, on the business you had, and what you had, the time you had, you couldn't have done better.
Yeah, I mean, to my mind, it's a very, very odd to sell on the back of that news. I was like, why would you sell? That's very bizarre. But obviously people did. But I suppose people, looking further down the line, looking at the profitability, still perhaps not convinced about it, and they get out. I don't know.
I think that's what it is. I mean, at the moment, the market's very hard, and if people don't see, it's almost like you've got to punch people. You've got to lay out they always present a good RNS. So I think if anything, that table at the top there didn't give a fair reflection of how busy they were, because just compared to a previous period, which that period was longer, in 2020. The H1 there were more trading days, 11 weeks in 2020 compared to 6 weeks now. So maybe it's an unfair comparison. They did state that in the text, but obviously people don't read the text. But when you read a box is a lot easier, a table is a lot easier to look at, isn't it? Compare. And so if you look at that,
private investors, I think, generally, massive sweeping statement coming up, but private investors,
I love those.
Yeah, here they come. Generally I think, oh, no, I know better. I can use this money elsewhere and it's going to be better for me elsewhere. And I'm going to go to here and I'm going to do there. And experience has told me, well, I'm speaking from a personal viewpoint. I don't seem to be able to do that. No, it's going to be better if I take that money out of there and put it into there.
Yeah.
No, if it's...
But also you've got social media where people are pumping stocks based on nothing apart from hype. And they think, this company will do 10 bags easy, and people don't believe that. Now, if you look at small cap stocks, micro cap stocks, the most important thing ever is growth. Have they got growth? Yes, they have. 30%, 31% on like-for-like sales, just on a couple of months' worth of data there already. So that's very good, because that helps the margins. The more people you get there, of course, you're not spending anymore. So if you look at, so they've got growth, and not only that, they've got. Not only organic growth, but they're growing the actual estate. So they're only at 19 sites, or they will be at by the end of this year. Their target is 50 sites, Now, if you're talking about box economics, and they said there, our box economics, and their box economics was this. Basically, 500,000 per site in revenue, and a margin EBITDA 30%, And if you break that down, it's about £10,000 per site per week, and £3,000 of cash, throwing off £3,000 of cash each site. They said now that it's exceeding our box economics. So we launched this on that business model, and we knew it would be very viable on that model. It's now beating that model. So that's a good thing. And so it's got growth. The model is proven. Of course, some people still don't believe it, maybe. But if you look at if you look at GARPs or growth at a reasonable price, you've got to look at the valuations of any company. Of course, you can't just jump in because you've got growth, and you can't look at a company that's 100 times revenue and think it's going to go to the moon, because probably not. It's probably gone to the moon. So let's look at the valuation then. If you're saying they're going to do 20 sites next year, no more sites than that. Not looking at franchises, not looking at anything else apart from 20 sites. They're at 19 sites now, right?
Yep.
So they're going to do 10 million in revenue. They're with 3.5 million of cash. Their enterprise value, because of course enterprise value is the market cap of the company. Take the cash off because that's an asset, a liquid asset, and then add any debt because that's the cost. So they've got no debt and they've got 3.5 million. And they're now valued enterprise at 25 million. That's 2.5 times next year's sales. That is nothing. This company can be valued at 5 times easily. If you are a market leader in a fast-growing leisure sector and you are growing, then 5 times easy. It's just 2.5 times. So it's not even expensive. It's cheap. It's cheap and it's growing. What's not to like here? What's not to like about this?
Yeah. So just getting you back on those box economics, what were you saying about the $3,000 cash per site?
So essentially, So it's 30. The EBITDA margins are 30%. So essentially, EBITDA is a proxy for cash. How much cash can you generate, from the revenue? So if a site is doing 10 grand per week, which is they say they are pretty much. In fact, they're doing more than that now. But that's
revenue.
Yeah, revenue. Yes. So it's 10 grand per week, and of course you can times that up by 20 sites. Then you get over 50 weeks. That's 10 million a year. But then it's easy. That's why I kind of like it. It's very easy figures. So on 10 grand, they're taking in cash. They're basically generating cash of 3 grand per site per week. So multiply that by 20 sites by 50 weeks, and that's the amount of cash you're earning in a year, and you can put that in a multiple if you want. And I've used, and in fact, let me get the spreadsheet. I've used a multiple of 10, EBITDA 10, which is not a stretch. You could do 15, 20 quite easily, quite comfortably for a growing company. So I've used 10 because that's peer average, but some of the peers are bigger and they're not growing as much. And it's the same with Gfinity. They use peer multiples when they say you can go higher than that because they're growing a lot faster than peers.
Last week we were looking at 10 Group and they were PE 15, weren't they?
Yeah. So escape. Let's look there. So and I've added in. Let me just go on. Where's the valuations there? Let's find where it is. I've got sort of spreadsheet here. It's very complex. Many tabs.
Oh, lovely.
Many numbers. I literally, I was doing this the other day. My eyes were burning trying to work out. And I asked Richard also about the margins on the other, which is very good. Listen to this now. The margins on the sites, right, are literally 30% because there's capex. But that would increase the more people go there. So because there's not the cost of persons. Anyway, the franchisees, the margins on those are 80%, and the remote digital play at home 80%. So they don't need to do a lot of revenue to generate the cash from those. So targets, okay. So there are targets for valuations. This year you can't really go anywhere. I mean, because obviously it's half a year. So you always look forward anyway. If you look at the broker notes for any company, they look 2-3 years down the line and base it on that. So, but I've got next year. You've got 10 million pretty much from the sites in revenue. That's based on 20. You can no more above that. I believe they'll have more than 20 sites operating by the end of next year. So I'm basing on 20 sites. There's 10 million cash from those. Remote and home, they're breaking this down saying it'll be around about, franchisees about 20% of the revenue of sites. That's how much they'll have, they reckon. And the home play, digital and corporate, that'll be about 10% of overall site revenue. So total revenue for next year should be about 13 million. Now that'll take us up to 61 pence at current shares in issue. Where are we now? Which is that's an 85% uplift. If it follows those economics, they get 13 million in revenue. It should be valued 85. Should be valued at 61 pence. That's 85% uplift. Now, who's not happy with that? Oh no, I want 1,000%. Be realistic, people. This is not crypto crazy. We'll go up 100% one day and down 20% next day. 85% is phenomenal return in a year. If you go out a year, okay, and they got 30 sites. Let's say you get 36 by the end of the next year, 2023. I'm saying you get a 97 pence target, 193% up. Just got to hold on. They're going to. This is the targets, Following year, what is the following year? It's 2024, 136 target. In 2025, I'm saying with 50 sites, end of the year 25, they're at 180. That's a 444% increase in the share price. As long as the box economics stay true and they get to 50 sites, And like I said, the exceeding box economics, so that could improve. But so all you have to do is sit and be patient, really.
The other thing that I've sort of learned more about, and it's interesting to me, is the whole VR thing, because one limiting factor of the whole escape room thing was always going to be, once you've done the rooms in that particular location, like, it's limited, like how often are they going to be refreshed, whatever. Yeah. But then VR gives you endless possibilities of what you can offer. So if they do get a real groundswell of popularity and lots of fans of their, like we were saying last week, rather than going bowling, you'd go to the escape hunt. VR is like, that's great, Nick. It's like, there's just almost endless possibilities of going to a new experience every week.
And seasonal. In fact, it's worth looking at. There's a company called Investor Meet Company, right? And they basically get the companies on after results days to go through their presentation live for you and use live questions. They did that this week. And a lot of people in the SharePickers Investment Club watched that and said, wow, if you needed a reason to hold or buy more of these shares, watch that. And it's pretty much like, the interview I did, but with Richard going through the presentation, explaining it all, and, the hopes, ambitions, where they are. What's
that? I've missed that. Sorry, I missed your webinar.
In Investor Meet. No, I chatted to Richard, but no, it was the Investor Meet is the webinar, but I'll send you a link. Saying there, what's very good is that you've got, they're cheaper. VR is cheaper capital expenditure because, of course, it's just software. You've got a room with, you don't have to build out a room. Pretty much they're blank, these rooms are, pretty much. They're just a square space. So, but the VR, and like I said, at the moment, this was the argument at the start, people say, oh, but once you do an escape room, you know the answer. Why would you go back? And they said, well, I don't know. I did that escape room back in November. I wouldn't have no idea what we did now. So we go back into the same thing. But first of all, let's look at the physical rooms in any site. Now the new sites have about 6 physical rooms. So how often are you going to do those? You're not going to get, Also, they're modular, so they can swap them out. So you can have, even though they've got 6 escape rooms, there's more games than that. So there's about 10, I think they've got 10 physical games. I think they've got something. I haven't counted, but so they can move them around different sites. They can change them, swap them up. But once you've spent on those physical rooms, of course, you can't just get rid of them after a year. And they said Birmingham's now been going for, since 2014, 2015, or whatever, the oldest site, one of the oldest sites. And spend on those have gone up. So people are not getting sick of them. There's proof in the figures there. There's more people. They haven't saturated. There's nowhere near saturation. There's a tiny percentage of people have done escape rooms in this country. But like you say, VR rooms are excellent because at the moment they've got 6 VR games. And so they'll have 6 physical rooms, and they'll have a VR room. But that VR room can do 6 different games. When there's a flick of a switch, whatever you book for, if it's seasonal, for example, they've got a Halloween one out now called Sanctum. The video looks quite good. It's quite scary. So they can just switch on Halloween for a month, And then they can do Christmas. They've got a Christmas story one now. And so if you want a Christmassy VR, escape room experience, Christmas. And then they can go back to traditional. So there's 6 different, what are they? There's there's 6 different VR things. And to me, that's huge because you can have a catalogue there of 50 VR games and you can pick what you want. There's an endless variety. So, I like that. I'm trying to VR. Nice. I was trying to say I did. There's an age limit on VR for 12 and over. And I said, why is an age limit for that? And he said, it's just, apparently, it's just, that's what they suggest VRs. Under 12 shouldn't be doing a lot of VRs, and it's just manufacturers. And so, it's a guideline for manufacturers, really, rather than us. I said, okay, I'm just asking as a dad of an 11-year-old and an 8-year-old. And he said, I think you'd be challenged on the 8-year-old. I said, no, I said 11-year-old and a big 8-year-old, I said. A big 8-year-old. And he said, I think you'd be challenged on the big 8-year-old, to be honest, if you went there. You may get away with 11-year-old. But the Sanctum one is 15 plus, because it looks a bit scary. It's blood and guts. But that's quite good, isn't it? I think,
Is it? Okay.
Yeah. Well, if you like scary stuff, isn't it? 15-year-old, 16-year-old, they love that kind of stuff, don't they? So, I say, when you get older, and I used to watch horror films as a kid, did you? And I don't know why you want to scare yourself. You want to be a big, nothing scares me. But as I get older, I would never watch a horror film now. With you? What's the point? I prefer to laugh. As an emotion, I prefer to laugh than be scared.
Yes, absolutely. But also, as you grow older, don't you go, well, they're just actors, There's a camera crew.
That's not even real blood.
That's not real. That wouldn't happen. You become more cynical.
For example, you look at Friday the 13th, that film with Jason is in the woods. You think, well, where does he live then? Where did he get his ghost?
Right.
Where's he getting groceries from? I suppose now he can get them delivered. But when this first started, this franchise, he couldn't get them delivered. He had to go to the shop. Surely someone would say, that guy there with the ski mask on and the blood all over him, maybe he's the one doing the killings in the forest. Shopping for milk and eggs. That guy over there, look.
That guy.
Yeah.
Maybe we should arrest him. Yeah. Yeah, exactly. Trufin had results.
Oh yes. Well, do you know, that's the next thing I think I know. And it took a bit of a dip, and I thought, don't. This market is tough. You get this. Like I said, Roslin Data put one of Paul's stocks, and I used to own that. It wasn't particularly bad results, but it took like a 20% knock, same as Trufin. And the reason for Trufin is, I think, the growth wasn't as massive as people thought, but. They did say they don't blame COVID, but there was COVID issues there. People held back spend and all that stuff, and added to this. They reckon it'll be faster growing next year. But but Trufin, very illiquid stock, And then when people start selling on the buzzer, on the bell, when market makers haven't got any stock because there's no one sold anything yet or bought anything yet, there's no liquidity, and you start selling. So the first demands they have in the morning for sells, they're going to mark it down. Really going to mark it down because they need to get some stock to trade it and get in out of it. So that's the first thing they do. Don't be tempted to sort of sell on the bell straight away. Hold on for a bit. And these companies are improving. Like I said, revenue for the group increased 18% to 4.9 million. Revenue at Playstack increased 79%. This is H1. Of course, if you look at it's quite lumpy, the revenue from Playstack, because Mortal Shell was released in H2 last year. So if you did a like-for-like comparison to H2, then it would be down. But H1, then started selling Mortal Shell. But again, they've signed Playstack, have signed 2 further contracts with global technology platforms during September. So that will help with revenue going forward in that quarter as well. So, maybe this quarter wasn't a blow-away quarter, but you've got to have a bit of patience. These are new companies. Virtus Capital increased the income fee of 26%. I think Oxygen, they do sort of invoice financing for local authorities. It's a leader in its field. That on its own could underpin the value of Trufin now, because Q3 revenue is expected to be above 20% ahead of same period in 2020. Achieved consecutive positive quarterly EBITDA throughout 2021, and it will post its first cash flow positive month during 2021 as well. And so they've Satago, Lloyds Bank. Discussions there, and they say now, and several other potentially significant partners. So I think due to the Lloyds Bank, sort of collaboration thing going on there, other people say, "Oh, let's look into that." If Lloyds Bank are looking at it, that's good, isn't it? When you have and that's validation sometimes with tech. If you get a deal with a big company, a well-known company, that company does due diligence for everyone else, pretty much. Because Lloyds Bank wouldn't be signing that company in a collaboration. If you go on Lloyds Bank website now, you can see invoice financing. It's on their sites. It's not saying Satago, of course, because it's a white label. But it's on their site. Someone actually, thanks to someone who posted me that link on Twitter. They are doing that. They're offering Satago product under their own name, of course, but it's Satago's product. So that's going to happen. And the confidence is happening. It's just Lloyds is such a big old corporation. It takes so long to get things done. They're annoyed it got delayed, but they're very confident it'll get done. They say it's annoying how long it takes to get done. Yes, but it's an amazing company to be in cahoots with, and we can't complain.
Yeah, and I think people everyone has to invest for their own reasons, or whatever. But for me, it's a bit like the Polarean thing, like we were saying earlier. It's that element of excitement and fun, isn't it? About the anticipation of potentially Lloyds, who knows, buying a Satago or whatever, or that's the exciting part of investing. It's
exactly. But Paul Hill's been a full-time analyst for 20 years. He's very experienced, and he's convinced. He said, "Listen, they won't mess around, Lloyds. They will just buy it. If it fits and it works for them, they'll buy it. And it'll be a kind of thing where they say, "Oh, is Paddy here? He's going to join or what? Where's he? He's not there, is he?
I'm here as well.
What? There you go. Steve. So I did don't say anything. I did tease at the start saying you told us within 20 minutes you weren't going on the podcast, and the reason you gave was the worst reason I could ever think of. Now I assume you're wearing a sparkly pink cowboy hat, hot pants, and tight t-shirt. So you and your friend?
Yes, I am. Yeah.
So
you can confirm I'm wearing that, yeah, obviously.
Yeah. So can you explain, Steve, why the heck you're going to London, because in my mind, it's the worst reason ever.
Well, going to see a musical. How's that the worst excuse ever?
Even the boys going to see a musical. First of all, I hate musicals.
It could be a cover. It could be a cover that I'm actually doing the London Marathon.
No, it's not, Steve. Is it? You're going to see a musical.
Yeah, I should have used the London Marathon as the excuse, and it was cover for going to see Back to the Future the musical.
Yeah, because you used the detail Back to the Future musical, and I thought there's too much detail in this, Steve, to pretend you're not doing that. So
yeah, I got that the wrong way around, didn't I?
Why on earth do you see that?
What?
Well, they're going to see the Back to the Future musical. What are you doing?
What? I like Back to the Future. It's my favourite film, and yeah, why not?
And now you can see a singing version of it. An all singing, all dancing version of it. That doesn't make it any better. The film is the best version. The singing, dancing, camp dancing on the stage thing, oh, he's going back to 1985. 1985 to see the Doctor. What are you talking about? I'm driving a DeLorean to the Doctor.
Hey, look, when you think about the musical, though, like some of the songs they've got, like Johnny B. Good, Huey Lewis and the News, there's some good tracks in it. I think it's going to be good. Well, you're just boring, just.
No, listen, those tracks were nicely placed in the film. They took up a couple of minutes, nice little break from the actual dialogue. But some of the musicals, they sing the whole bloody thing. I don't want you singing the whole thing.
That's the nature of them.
I know. You sit there, just sing everything. Every line does not have to be sung. Can you imagine? I just find them so removed from reality. You imagine conducting your life
like that. Some musicals don't. They have dialogue in as
well. Yeah, but most of them are. You imagine conducting your life like that. Going to Asda.
I know.
Going to Asda or something. I'm going to the self-checkout because it saves me time and money. Lock that guy up, please.
Enjoy that, actually.
Yeah, lock that guy up. Yeah.
Asda the musical.
No, we're going to see that. Yes, I would go to see that. Yeah.
But Steve, I didn't even know there was a Back to the Future musical. So how come you've suddenly become a musical fan and you know about this?
He's a fan of Back to the Future.
I haven't. So yeah, it's one of my friends suggested it. Well, I got it for me for my birthday, my 40th, and I was like, yeah, we'll do that. So yeah, let's get, I'm actually really looking forward to it. Some of the reviews and stuff are amazing for it, and I think the effects will be quite good as well. Like a bit of geekiness from my point of view.
Yeah, true.
Well, as long as you enjoy yourself, Stephen, no harm to other people, it's fine.
Exactly.
Yeah.
Remind me never to take you to the musical.
You never get me to the musical. If you suggested that,
clearly.
Why would you? If you wouldn't even send that text. Just you fancy coming to a Back to the Future musical, because you'd get a swear word back. A couple of them.
I'd come along, Steve. I'm not.
Yeah, okay. I'll invite Paddy and Pete. They can come.
Yeah, that's fine.
Yeah. I suppose the only way I'd enjoy a music like that, right, is if I was, on magic mushrooms. I think otherwise I could not accept that this is in real life.
Who says I haven't got them packed in the car? I haven't, by the way.
Yeah, well, you just said it. Okay. Yeah. Well, so where are you at the moment, Steve?
Where are we?
Yeah.
On the M4. On the M4.
Yeah, Steve's that. I was thinking of specifics.
Yeah.
I think we're on Swindonish way.
Are you stopping in Lee Delamere?
Yeah, Lee Delamere, yeah.
Lee Delamere. I drove past that the other day, right? And I thought, where does that come from? That name. And I just, in my head, I constructed a whole story about a man who, his ambition was to build a service station before motorways existed, Thinking one day they will have concrete highways travelling through the country, and I, Lee Delamere, will have a service station for people there. And I thought, where does he come from? He's the king because he was there before anyone else. Lee Delamere foresaw this happening. He's amazing, Lee Delamere is. I think there should be a statue there of a man called Lee Delamere, just a little story behind the backstory, Anyway.
Unfortunately, it's just the name of the village.
I know, but Lee Delamere.
It's great to think that, yeah.
In fact, going back to Dunkin' Donuts and calling up asking for Dunkin', we should call it Lee Delamere. Is Lee there, please? Yeah. Is Mr. Delamere there, please? Because it's a very exotic name as well, isn't it? Mr. Delamere. Mr. Delamere has opened up a service station.
It is, yeah.
His name is Lee. Yeah, cool. All right, Steve, anything you want to say about investing this week, Steve?
I don't know what you've been talking about so far. Anything interested?
Normal stuff. Normal
Anything
suspects.
interesting?
Yeah. All the normal suspects, Steve. And
Any news that grabbed you this week, Steve?
No, was it this week or last week? I had a little bit of rise in Polarean.
Yeah, it was last week, I think.
That was last week. Okay, that's old news.
Yeah.
My PF has done quite well this week. Or no, actually, it's pulled back a bit. But
Friday was dreadful. 1st of October was dreadful. But
yeah.
No, we just talked about
that for next week. Is it next week?
We just talked about It's gone. Daddy's on the ball. It's on Tuesday. We're saying could be a delay. Just time zone differences, And Jeff and Chuck getting their house in order before.
It'll be Wednesday though, really, won't it?
Yeah.
Well, can you jump in the DeLorean and go and tell us?
Exactly.
Come back and tell us.
That's the only useful thing for going to see. They probably have a DeLorean there, won't they, on the stage, will they?
Yeah, I don't think Back to the Future is going to be mentioning Polarean halfway through the show.
No, but listen, will they have a DeLorean on stage, Steve? Have you had any preview of this show?
I would hope so.
Something alternative to the sports almanac. It'll be the medical almanac.
Yeah, but Steve, I've asked you a question. Do they have a Delirian on stage?
Maybe a DeLorean, yeah.
DeLorean, yeah. Do they have that? If they don't, if they have some other car, that will be really poor. If they have
they surely have that. Otherwise, that would be really cheap.
Yeah, you imagine if they had just a generic sort of 1970s sports car. That's not a DeLorean.
DeLorean.
That's it, DeLorean.
But Steve, can you please start heckling halfway through? Did Polarean get FTA approval next week?
Yeah. That'd be good.
I'll do that, Pete. I'll do that. I'll let you know how it goes down.
Okay, thanks.
And cool. We just finished off on Trufin. Anyway, but just finished off on Trufin. By the way, they've cashed 12 million, valuation 4 times. So it's not a stretch. And just have it. And I said, if you're going to sell Trufin, it's an illiquid stock. If you want to get out, wait until the Starger deal. That will shoot it up. As much as it went down, it'll go up by that easy when that deal is announced. And there's other things in the pipeline. Steve? Did you see the Gfinity broker note?
Yes.
What's the target price they have?
9.2 pence, is it?
Higher.
9.5.
Yes, 9.4 I think it is. Yeah. But 9.5. No,
that's good, didn't it?
Yeah, 9.5. We're only at 4.1 pence. I'm thinking my top after the news on results on October. I'm going to top up. I think if I get some spare cash from somewhere. But I like that. So that's based on 5.6 times calendar year 23 revenues and sales. So so it's fundamentally good. And Steve, by the way, I'm going to ask Fund Stock Corner. Do you have any fund stocks anymore in your Fund Stock Corner? This is, of course, I've created a channel now on Discord called the Fund Stock channel. After Pete, like I said, Pete's dud stocks he puts in the Fund Stock Corner. He hasn't got the balls to sell them, so he said, "No, these are my fund stocks. That's fine. No, it's fine. No, it's fine. I'm losing, but I'm happy. I'm smiling."
Funny enough, actually, I wouldn't really call it fun because I don't really have much fun with it. My EUZ Europa Metals. But this week, when all other stocks were all in red, Europa Metals. I think they found something in the grounds which was probably not valuable, but it went up by 20% in a day, so that was my highest riser. Obviously, it pulled back.
Sometimes, this is a good analogy for this. Sometimes you go.
I'm only 80% down in that.
All right, woo! You're getting close to the break even, Stephen. Well, not close yet, but you are.
A couple more years.
Yeah, listen. Let me say one thing as an analogy there, right? Sometimes when you go to the toilet and you say, "I don't want to drag this down a layer, in quality, the standard of the podcast." But, sometimes you just, you do your business, flush the chain, you leave, and you go back an hour later, and there's something still floating there. There's something still floating there, yeah? Right, still there, and you flush it again, it won't go down. And then third time, it may go down, and it's gone for good, right? And that is like that stock, Steve, you talked about. Sometimes SHIT floats. When the market's flushing down, the SHIT sometimes floats. You find that some of the worst stocks sometimes do well when the other market's there. But so that's why some people say you should have some rubbish stocks. But I've got a fun corner, Pete. I've got a fun corner, and I've got a stock in the fun corner.
Good. Everyone should have a fun corner.
Yeah. Do you want to know what it is?
Yeah, I think I
you
do
can tell us
know,
anyway.
Go on, tell us.
Hemo!
Sorry?
Hemo!
Okay, hemo, right.
That's all you need to know. Steve, Hemo!
Is that like a wrestling thing?
Yeah, no, if you go back, right, I bought this stock. It's called Hemogenics Pharmaceuticals, right? They're a preclinical stage, so very, very risky, right? Biopharmaceutical group developing new medicines, treatments for autoimmune disease. So this is a very hot area, basically programming your cells to attack other cells. Very hot area. Now, if you look at the chart, and I bought this company back when they IPO'd, when Vlad, a Russian guy based in New York, came on talking about the tech they had. It was very impressive. But I didn't. I lost patience of all because this preclinical it's very risky and it takes a long time to get going. So I just sold out. I just sold out. I noticed a lot of people kept saying to me on Twitter, and I didn't like to say I sold, saying, "You still in this, Joss?" I just ignored them. But I sold out, and then about a year after I sold out, right, it went from in a space of a week, it went from 1.1 pence, right, to 15 pence.
Yeah.
Wow.
So it did 10 bags. It did 10 bags within a few sessions.
Yeah.
Based on and that's the thing. There's upsides because they're in the cancer area, oncology. It's huge upside there. But now, so the reason why I went up there is because they released some news, right? Steve, put yourself on mute a second. You're very loud.
Yes, Steve, are you in a...
Or close your windows. Are you in a DeLorean?
Steve, are you in a rocket on the way to London?
He's in a DeLorean with the gull doors open, I think. Yeah, either put your windows up, Steve, or... so that news is still there, but they had some funding issues. They had to do convertible loan notes. Now they're out of that. They've still got 10 million in cash. And if you look at the chart, right, it's literally flatlining. You put a ruler under where they are now, 1.8 pence. They went up to 16 pence or 15 pence. They spent a few months up there and then came back down. So it popped. But it didn't drop for a while. It had a bit of volatility. It went down to 6 pence, then back up to like 14 pence. So huge volatility. But then it started grinding lower and lower, and they dropped off a cliff then back in, when was this? Let's move that. So they dropped off a cliff back in April of this year, and they went back down to 1.5 now, 1.8 pence. So very straight line on the chart, but their valuation now is only about 18 million market cap. Now that, they got 10 million in cash. They're valued for there's companies in America, like I said, Vadim came on the podcast, worth listening to. He said, companies in America are valued in close to $1 billion, hundreds of millions on the kind of tech this company has. But yet this is valued at 18 million, and the chart is flatlining. So it's only a bit of fun, not a lot of money in there, but it'll flatline for a while. Will I have the patience to hang on for that big uplift? Hopefully. But he did say there's no binary outcomes. They haven't got any clinical trials happening where there's a binary outcome that could scupper it. So they probably release some decent news over the next 6 months or so. Hopefully that will have a catalyst for a bit of a rise. Just a bit of fun in the fun corner, Pete. What's in your fun corner? Are you going to get some hemo in your fun corner?
I listened to that, for Vadim, and it's interesting. Exactly, that absolutely qualifies for fun corner stuff. Have a couple of quid in there, just a bit of laugh, and like you say, hopefully it doesn't get scuppered by some massively binary negative result, and equally it just starts to improve and some good news. So that's a bit of fun, isn't it? So exactly, I'm very tempted.
Yeah, cool. Steve, are you joining? Are you adding hemo to the fun corner?
If I invest into it, it'll go down. So
don't no.
Yeah, it's like on race day with me putting on the same horses as you. So probably best not. Yeah,
but let me say that this has the potential. I'm not saying 10 bags, but it has the potential to do that. Doubling in a short space of time, quite easy. Just have to release some good news. So the interims are out. Read that. There's a lot of stuff in there I don't understand what they're doing. It's very immune sort of diagnostics. It's very clever, but. It sounds.
Isn't the first rule of investing only invest in things you understand?
Yeah, anyway. This is where I'm investing it just because I like the cash, I like the valuation. It's oddly, and I said about this in the fun corner. It ticks many of my, my filters on my schedules, strategy.
But not all of them.
Yeah, so it ticks like the size. It's got the cash. It's got IP. They've got patented IP. It's in a very hot commercial sector, very big hot commercial sectors. So the upside potential commerciality is massive. The only place where it falls down on, really, I mean, the guys who own skin in the game. The only place it falls down on is has they got a route to cash flow positive? It hasn't. So that's why you could have pops and drops, because if it's not based on fundamental financial, revenue and profit, it's based on news and hype. So that's the only thing. So it may be very volatile, going up and down. But but like I said, it's got that protection, big markets, got cash, skin in the game. So there's many things in there. It does tick the boxes off. But there we are. Anything else? Just one story I just want to say where I thought was hilarious. I saw this. I literally made me smile. Do you see about the Turkish man who was reported missing unknowingly and joined a search party looking for himself? That is like those classic comedy films or cartoons, isn't it? Where they shout, and literally he wandered away from his friends in the forest while he was drunk, according to Daily Sabah website. His wife and friends reported missing after they were unable to get in touch with him for several hours. Mr. Mutlu later joined a group in the area who were helping the authorities search for him. And then when members of the search party began calling out his name, he said, I'm here. I'm here. Are you looking for me? Yeah, no, that's me. He was helping looking for him. How drunk was he when he said, what am I looking for? You're looking for a guy about 50. His name is Mutala.
It's easily done.
Yeah, his name. Yes. Right. So Steve, who didn't thought. I thought I told you I wasn't there Saturday. No, that was Paddy who told you that. Yeah, sorry.
Yeah.
All right.
I genuinely thought I did say I wasn't coming this Saturday, but I don't know. Maybe I typed it in the wrong group, and some other group knows I'm not coming this Saturday.
Okay, I know, it's unbelievable. So one of the things, TV recommendations. Steve, Goliath is brilliant. I went on the Discord. There's a TV recommendations channel, and Steve suggested Cruel Summer. We scrolled on Cruel Summer at 2 out of 5 stars. I thought that's Steve's one of those stars, probably. I'm not going to watch that. And then someone suggested Goliath in the TV recommendations. Started watching that with Billy Bob Thornton. It's cracking. It's not dark. Steve is very good. It's about a lawyer taking on big corporations. And apparently he was a legendary trial lawyer, but he's become a drunk. And in fact, one of the big lawyer companies he's taken on was one that he founded. So it's very good, Steve. He's a good actor, Billy Bob.
Is that not the thing, the gangster thing that you were watching at my house a couple of years ago?
No, that's Gomorrah. Goliath is on...
that's what I was thinking. Sorry, I got mixed up.
I didn't realise, also, Amazon Prime now is on the app on Sky TV. I had this little dongle you plugged into the thing. There was problems with it. I was trying to reboot it. We couldn't get it. And I realised I was going to try and find a Sky Fire Stick thing. I realised now it's on the app, isn't it? It's on the app on Sky TV itself. You don't have to have a plug-in thing, a USB thing. So anyway, it's called Goliath, Steve. Billy Bob Thornton in America, based in Los Angeles. Very good. Very good. Very, that's my recommendation. Very good.
Megan will love Cruel Summer. She'll love that. Give it a go.
She's loving Goliath. Yeah.
Okay, well, I think she'll like Cruel Summer as well.
Is that what you call it?
Someone else who listens, can someone confirm that Cruel Summer is very good?
It's got 2 out of 5 stars, Steve. No,
that's the best films.
No, it's not the best films. That's the best films. I agree with you with Oscars. We had this conversation on WhatsApp. You said Oscar films are always rubbish. Yeah, the difference is, though, they are arty industry people voting at Oscars, When you got, say, 1,000 reviews, 5-star reviews on Amazon Prime, there are people actually watched it, not these arty idiots who try and pick something a bit, inside that people, it's very arty, very good. Because most Oscar winners are rubbish.
I enjoyed it.
You will love Goliath, Steve. If you don't, I'll put it this way, Goliath will be better than Back to the Future musical.
We'll see this evening.
I guarantee that. All right, okay, but cool. Anyway,
do you guys want any merch from the merch stands on there?
Yes.
Yeah.
DeLorean.
A
Polarean mug. Okay.
No,
cool.
DeLorean. I want the DeLorean.
Yeah, I want the actual DeLorean, please.
Yeah.
Right, yeah.
There's actually a Netflix documentary on DeLorean, the guy from Ireland, wasn't he? He started making them in Ireland. He's American. Yeah.
Went bankrupt, didn't he?
Yeah. So it's worth watching that. But I started watching it, I got a bit bored. I found something else. Cool. Marvellous stuff. Steve, have a nice time. Peter, have a nice time.
Thank you. Have a good weekend.
Pat, have a nice time.
Yeah.
Bye. Well, I find it quite funny, though. Steve's not gone with a lady. He's gone with another fella.
Yeah, even better.
Yeah. All right. Thanks again, boys. Bye. Next week. Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.